I'm Corbett Wall with DV Auction, here with a 3-minute cattle market update for Friday, September the 30th, where we're entering the fourth quarter now, and we're way behind. If you're talking about a football game and you're a cattle guy, you're way behind going into the fourth quarter and things aren't looking good. But we've bound to be getting closer to the bottom now. I have thought, a lot of us thought for a long time that fat cattle would have to get below $1 to really raise all the eyebrows and get things back fundamentally looking like it had some support on the bottom side. It looks like we're headed that way. We've seen some cattle sold, a few deals here and there, lower quality or whatnot that sold below $1, and that raises some eyebrows when you get to doing that. You look at your futures on live cattle for the October contract on Wednesday was down 35. Thursday down $1.57 after playing on either side of steady most of the day, but ending the day on Thursday at 101.90. That's getting pretty close to that century mark there. Feeder cattle on the October contract Wednesday was up $1.17 and Thursday down 52. End the day on Thursday at 127.50. Most all your out fronts are down around and below that 120 there, so we can look for these feeder cattle and calves, a lot of calves coming up to be a whole lot lower than what people have been used to for the last couple, 3-4 years. You look at the fat cattle trade, and over 71,000 negotiated sales through the Thursday there, and most of the sales happening on Wednesday. Selling on a live basis mostly from 103 to 104, and a pretty even split there. It looks like the weighted average is going to come in real close to 103.5. Your dress sales had a wider spread there from 160 to 164, and actually a pretty even split right there. A lot of you may have seen a release that showed on Thursday there that the USDA Ag Marketing Service is going to start putting the results of that fed cattle exchange, or those sales, into the mandatory price reporting information, which I was part of that team whenever we first started mandatory price reporting there, and it seemed kind of funny that during that whole mandatory process there was a lot of requests to tweak things here, or add this, or take things away, or change the way they do the mandatory price reporting. And USDA's view on that was always that it basically took an act of Congress to get that changed. Well, one of the things that come out when they started mandatory price reporting was that auction cattle would not go in. But it looks to me like that fed cattle exchange, they sell cattle to the highest bidder, which is basically the definition of an auction, and now they're going to start putting those cattle into mandatory price reporting. But the thing is, Fed Cattle Exchange was interested in having that information reported by USDA, and whether they wanted it in the mandatory price reporting information or not, I don't know. But it's really going to take the legs out from under that whole process. The only reason that's a feedlot or a guy that fed cattle would consign his cattle to the Fed Cattle Exchange and pay some fees there and some commission, would be the chance of maybe getting more than what everybody else was going to get. Well, in a short bought situation, a packer might come in and pay more for cattle in an arena like that to get his hands on some cattle, and the main reason he would do that is because it was not going to be reported. It was not going to change that weighted average and affect all the formula sales that he had already spoken for. But now that those prices are going to go in there, it's not going to behoove the packer to give any more, even if he really needs the cattle. So I really hate to see that, because it's a good idea. It was something that could have bolstered negotiated cash trade, but you know, and they've spent a lot of money promoting that. The heck of it is, they don't sell very many cattle on there. They offer some cattle, but most of them, or half of them at least, don't sell on there. To be honest, there's live cattle auctions in the ring, fat cattle auctions that are not being reported by USDA. or any kind of a government service there. You look at Stockman's Livestock in Yankton, South Dakota, this week had 2,600 head. You're not going to see that on the Fed Cattle Exchange, and all those cattle sold. You don't take fat cattle into an auction, unload them, run them through the ring, and then PO them like you can online, and it doesn't bother you with shrink or anything. But that's just kind of a interesting happenstance. I thought I'd give the viewers here a little bit of information on that. But we've seen some box beef recovery. Slaughter so far for this week through Thursday, 452,000, which is down 1,000 compared to last week, but up 7,000 from the same week a year ago. CME Cash Feeder Cattle Index, it's funny, it always seems to be inflated towards the when they get ready to close the contract, and there is a September contract. It's at 134.88. The real-time index is 128.18, figured the same way, and within pennies of what your feeder cattle board is trading there on for your October contract. But you look at some cash feeder cattle markets. El Reno, Oklahoma on a Wednesday, 7,100 head. Feeders reported sold $8 to $10 lower. Your calves $5 to $10 lower. Lost all that they gained last week in that big sale that they had, and that was so much higher. But you look at your cattle market, Central Market report out of El Reno there on Wednesday. Actually, your yearlings looked more $8 to $12 lower than the 8 to 10 that was reported on the government market report. You look at some other cattle market, Central markets there. Salina, Kansas had a similar down market there, but Pratt was not as bad. Pratt's yearlings were really kind of unevenly steady to weak compared to the previous week. But that's 3 minutes, and we'll talk to you next week.